This is Richard Wolff for Democracy at Work with another Wolff Responds. I want to talk about a dead end. It's a dead end for American economic policy. It's a dead end for the Democrats' control of Congress. And it's a dead end, likely, for Mr. Biden's political career. I'm not sure, of course, what will happen in the future. No one can be. But it is looking like they have come to a dead end. I want to describe it to you and then leave to your judgment whether you agree or not about that dead end that we have come to. First, it's a dead end because there are two ways to go. You have to go with one or the other or some combination. And as I will try to show, all ways out are blocked. Let's begin with part of this story. Inflation. We are currently living through an inflation. Consumer prices, wholesale, retail, they're all going up. The latest number for the last 12 months, 7.5% rising prices. This is not a sustainable arrangement. And let me explain briefly why. When prices go up, human beings buy less of the higher priced goods. That's a kind of basic principle in economics. In case you're wondering whether people's income is going up as fast as prices are going up, the answer is a very clear and unequivocal no. Average wages, and there are problems with how they're counted, are about 5, maybe 5.25%. Prices are going up 7.5%. No genius required here. Wages are not keeping up with prices, which means even if you're lucky enough to get a wage increase, you still won't be able to buy as much with that increase as you were able to buy a year ago because you didn't have that increase then, but the prices hadn't risen 7.5%. So with fewer goods purchased, fewer services purchased, there'll be fewer jobs. The inflation threatens jobs. Very bad future, but only the tip of the iceberg. American prices going up 7.5% make me want to compare how are the prices of our global competitors doing. Number one competitor in the world now, the People's Republic of China. Its current inflation rate is, get ready, 0.9%. This country, 7.5%, that country, under 1%. And what that means is consumers around the world are going to be shifting from U.S. goods to Chinese goods because the U.S. inflation is pricing U.S. goods out of the market. And since prices are going up faster than wages, and prices are the money received by employers versus wages are the money received by employees, the inequality of wealth and income between employer and employee is getting worse, and it was already an extreme problem. And finally, an inflation is like a slap in the face to a population that has just gone through one of the worst phases of American history, a simultaneous public health disaster and a simultaneous economic crash. Excuse me. That was bad enough. It cost people their savings. It cost them livelihoods. To give them an inflation now, it's too much, and it will deepen and widen and intensify divisions that are becoming socially unsustainable. Well, what is the Biden administration? What are the Democrats? What is the whole ruling class of this country doing about this unsustainable inflation? Well, the only real proposal so far is that the Federal Reserve raise interest rates 2, 3, maybe 4 times in this year. That is supposed to be the answer. Let me go through why that's a dead end also. If you raise interest rates, here's what you do. You make buying a house more expensive because the interest rate determines what your monthly mortgage payment is. And if interest rates go up, the cost of housing goes up. The number of people who can afford a home drops because it's too expensive. Fewer homes are built. Fewer people are hired to build those homes or to build the furniture that might have gone into those homes. This is a job killer, but we're not even beginning to be done. Interest rates going up make an automobile purchase more expensive because the monthly auto payments go up if the interest rate buried in there goes up. Your credit card balance at the end of every month will now be higher, not because you purchased anything extra, but because the interest rates of carrying that debt will go up. This is a disaster for most people, but we're still not done. Over the last 20 years, as interest rates were brought virtually to zero, every business in America, no matter what its problems were, no matter what incompetence its employers demonstrated, they could solve every one of their problems in the quickest, easiest, and cheapest way by borrowing money from the Federal Reserve at zero or near zero interest rates, which is why corporations are in deeper debt today than ever in American history. That's why the government has been borrowing like there's no tomorrow, and it is in deeper debt than ever in history. And if you raise interest rates, you raise the cost of carrying that debt. Many companies will go under. They can't cover the higher interest payments on the debt they have accumulated. Or worse, they may raise their prices even more than they already have to recoup money they need to pay off the higher interest rates. And the government, having to pay higher interest, will be coming to us for more taxes to pay the higher interest, or cutting back on needed social services to free up money that used to take care of our highways or our colleges and give it instead to those who are owed the interest. If I had time, I'd go even further. One of the largest creditors of the United States is the People's Republic of China. If you raise interest rates, you're going to have to pay them more than you already do in interest payments every year. No, the reality is raising interest rates has as many problems as the inflation was itself a problem. You're stuck. Either way is going to be turmoil, trouble, dislocation, unemployment, risk of further rising in prices. It's a terrible dead end into which the accumulated problems of U.S. capitalism have taken us. And none of our leaders has a clue how to get out of this awful mess. And to pretend that we have a path, that somehow the Federal Reserve can just lower the inflation without the negative consequences of raising the interest rates, is to give them a measure of control and precision that nothing in the history of that institution justifies. This is a serious dead end, and it reflects a society whose problems can no longer be swept under the rug, postponed, kicked down the road, or anything else. We are in for a very rough ride. If honest discussions of burning issues like this strike you as valuable parts of a national conversation about what to do, because the only way out here is system change, which is what the powers that be never want to open up for discussion. Well, then partner with us. Make sure these perspectives get in to the national conversation. We want to work with you. We both need to work on extending our reach. And we ask you to partner with us, to share videos like this with friends, colleagues, family. And of course, if you can help financially to cover those costs, well, then your partnership is that much more valuable as well. Thank you.